Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on today? We got nothing going on. It's a holiday. I get a little sad when the markets aren't open, but everybody's out there having a good day. That's great. But anyways, the markets will be open tomorrow. So what's going to happen tomorrow? Well, look at this market has just been in this runaway mode, right? There's no fear in the market. The VIX is extremely low. But what there is in this market is there's extreme greed. Everybody's getting greedy. Look at there right now is the most calls that have ever been sold, right? We're at a record high level for S&P call volume. Record high. It's never been more calls being bought. Now, unfortunately, this usually marks a market top and not the market bottom. I do think this market's going to come back in. But hey, be careful here. Be careful. It can keep running longer than you think. This market will come back in. I think this whole rally is going to get wiped out, but it can keep going, but I do think we're getting really close to the end. Matter of fact, I think this is the week where it's going to turn around. We'll see if I'm right. I've been wrong about this. A lot of people calling this a new bull market where we're just going to run up, make new record highs. It's possible. I don't see it that way. Just my take, but there is extreme greed out there. So be careful on your positions because I think they're going to come back in. All right, so the market's closed, but we got the real estate market. Now, real estate market's always open. You can go out and buy a house today. I bet there's still probably even some open houses left over from the weekend that are having an open house on this holiday. We'll see. I don't know, but okay. I don't even know where to start here. I got to talk to someone about this, so I'm going to talk to you guys. All right. So I was talking with my friend over the weekend. Now, he's a buddy of mine, acquaintance, if you will, but I call him a friend. All right, so he just told me that he went and closed on a property. He went and bought a house, right? Bought a house in San Jose, California. San Jose, California. I go, that's great. What'd you get? Because you got to sound excited, right? I can't say, oh, you poor critter. No, you got to be excited for him. That's great. What'd you get? Oh, I got this little 2-bedroom, 1-bathroom, and it's 950 square feet. I go, wow, that's pretty exciting. He goes, yeah, it's on the west side of San Jose, so it's not in the bad area. I go, that's cool. Now, how big's the lot? A 4,000 square foot lot, 950 square foot house. And here comes the killer. How much did you pay? Well, Mike, it was... prices have come down now. I think it's got bottoming out. I picked this place up for $1.3 million. 1.3 million, 950 square feet, 4,000 square foot lot in San Jose, California. Again, $1.3 million. Well, how much did you put down? Oh, I put down 300,000 so I could get the loan balance down. Well, you put 300,000 down. So you took out a loan for $1 million on this 950 square foot house? I shouldn't be laughing. That's what he did, right? So he got the 7% loan. He's very excited about it. He's moving in right now as we speak. All right, let's talk a little bit about this. Now, there's a lot of people right now that are very obsessed with home ownership. He would be one of them. He was so obsessed he couldn't miss out on this great deal, this great bargain, right? Okay, I don't look at it as that good of a bargain. Okay, let's take a look at it. He got a loan for $1 million, right? I'm just going to do interest only. 7% is his interest rate. $1 million. What is that? It's roughly, I'm using rough numbers. $6,000 a month is his mortgage payment if he's just paying the interest. I know it's more than that, but let's just say he's just paying his interest. $6,000 a month. Okay. All right. What's his property taxes with throwing some home insurance? Property taxes, home insurance, about $1,500 a month. $1,500 a month. So $6,000 for the mortgage, $1,500 for the property tax. So $7,500 a month. All right. Well, what else am I missing here? Let's see. He put $300,000 down. $300,000. If he just put that into a money market in the bank, he could get about 5%, right? So that's got to be another $1,500 a month he's losing out on. Okay, so it's really costing him about $9,000 a month for this 950 square foot home. You can't make this stuff up, right? Okay, all right. So, well, you don't know the area, but I have a friend that rents, he rents 1,000 square foot home. Anyways, in the exact same neighborhood, 1,000 square foot home, a bigger one, a little bigger than my buddy just bought. All right, so I got this other friend. He's a renter. How much is his rent a month, Mike? Well, 3,000. Actually, it's 2,900. But we're going to round up rough numbers, 3,000 a month. So you could pay 3,000 a month in rent, or you can go with the $9,000 and own. But people are obsessed with home ownership, and anytime I even suggest renting, people look at me like I'm crazy. Mike, renting just throwing your money away. I'm locked in for 30 years. 30 years. That is so cool. What if you get a job loss? What if you can't make the payment? What if you get a job relocation? What are you going to do? Oh, well, then I just turn it into a rental. It's going to make a great rental. I'm thinking in the back of my mind, yeah, my buddy will pay you $3,000 maybe. Well, not quite. He'll pay $2,900, but he might get $3,000. Let's say he can get $3,000, but he's losing $9,000, right? So that's a $6,000 a month difference. Now, what we call that in the business, we call that the big alligator just coming and eating your money every month. Look, don't get into the rental business if you're not cash flowing. You got to cash flow. You don't want to be in a house. Let's say he gets relocated. So he moves down to Texas. He buys a house down there, and he's got payment down there, but he's up here collecting his $3,000 rent, but he's out $9,000 a month. Okay, well, he's losing, it's not fun to lose that kind of money. Now, he thinks the house price will double from here. Now, do you think, let me ask you a question. I do want you to leave me a comment on this. Do you think a 950 square foot house in San Jose, California is going to be selling for $2.5 million anytime soon? It's $1.3 million right now. Double it, it'd be 2.6. How long do you think it's going to take to get there? Now, in real estate investing, they go, oh, Mike, you don't understand. Houses double every 10 years. 10 years, this one not going to be $2.5 million. All right, so let's say he wanted to sell the house. Let's say he got transferred to Texas and wanted to sell the house. Well, what would he really lose, right? Well, let's say I'm wrong. Let's say I'm wrong and houses don't drop. Let's say I'm wrong, they don't drop. Let's say they stay at this level for 5 years. 5 years. So he's in this house making his payments for 5 years, right? And after 5 years, he loses a job. He finds one in Texas, moves to Texas. Okay, so 5 years later, after he's been paying the difference between renting and owning, about, what is that, $70,000 a year difference approximately. He's been doing that for 5 years. So he's out right there, $350,000. All right. Now, if he's got to sell this property, let's say he can get the same amount. Let's say he can get that 1.3. All right. It's going to cost him about $100,000 in realtor fees, closing fees, and just moving fees. So he's out $350 plus another $100,000. He's out for almost $500,000. And that's if they stay even. Now, I'm saying they're going to come down. Now, you can listen. There's some Zillow article that came out over the weekend saying we're going to be up by 5% by the end of the year. Yeah, good luck with that. Okay, get out there and buy. Hurry and get in. Look at the market's going up. The Zillow guy says we're going to go up 5%. 5%. Look, if you bought your house in the last year and you have to sell, you're way underwater. You're underwater even if you don't have to sell. But if you bought your house in the last 2 years and you have to sell, you're not going to make any money because you're going to have that commission hit on the sell end. Okay, this is just my take. Now, I know there are people that are just obsessed with home ownership, like renting. Renting is like the devil, giving your money to the devil. I don't know where they get that from. That is not biblical. Anyways, that's just one situation that I have right now. Two different friends. One's a renter. One just bought a house. I don't know which one's going to be better off in 5 years from now. Actually, I do, but I can't tell anybody. All right, so let's move on. Let's move on. Let's move on. Let's talk about this other article that came out over the weekend. All right, so this other article is about the credit crunch going on. There's a credit crunch going on. Now, remember, rates have gone from 3% to 7%. Okay, all right. So there's a little bit of a credit crunch going on. And the article says that it hasn't been this hard to get a mortgage since the year 2013. Okay, so it's getting tougher to get a mortgage. Even if you got good credit, even if you got a big down payment, it's getting tough to get a mortgage. But you ain't seen nothing yet. You ain't seen nothing yet. Now, here, it should be really easy to get a mortgage right now. Why? Why? Well, because we just gave the banks $400 billion, and that's just to bail out the last three banks. And believe me, much more bailout money is coming. Much more bailouts are coming because there's going to be many more banks going under, right? All right. So they gave $400 billion. This is just this year to the banking system to keep it afloat so that they can give mortgages out. So what if they didn't give that $400 billion? All these banks, they'd be in a lot of trouble, Now, the Federal Reserve, they've been buying mortgages like crazy. Got $3 trillion of them still on their book. $3 trillion worth of mortgages on their book. Now, what's happened to these mortgages since they bought them? Well, they've gone down in value. Why? Well, they bought them when rates were 2.8%, let's just say. So they bought $3 trillion of mortgages at 2.8%. Now, all those mortgages, when rates went up to 7%, those mortgages got a haircut. They're almost half off. But let's just say they lost a third of the money, and that would be $1 trillion. $1 trillion. If they have to sell those mortgage-backed securities, which they say they're doing, anyways, they will lose $1 trillion. Now, does the Federal Reserve really care if they lose $1 trillion? No, they do not. Do you know why? Why? Because me and you get to pay the trillion. They never, ever take a loss. Anything they sell at a loss, the taxpayer pays. Anything they sell at a profit, they get their share and they split it with the Treasury. Okay, all right. But anyways, where was my point? I got a little bit lost. So the credit crunch. So there's this credit crunch going on right now, right? It's harder to get a mortgage. Now, here's the thing. People think that the credit crunch is because rates are high. Okay, people don't understand this. All right, let's say we go into a recession, which I believe we will probably by the end of the year. And if we hit a depression, that'd be bad. That'd be bad. All right, but let's say we just went into a recession, and in a recession, a lot of prices go down. In depression, prices drop, right? But people, they run for safety. And they still think that bonds are safe. So they're going to be buying U.S. government bonds because they don't want their money in the stock market. They don't want it in real estate. They want it safe because it's a recession. So they run and they buy these bonds. Well, what happens to the interest rates? Well, the interest rates go down when people buy bonds would be going up, and that would mean the interest rates would be going down. So this would be good for the credit crunch, Mike, wouldn't it? No, it would not. You can have a credit crunch with very low rates. You could drop the rates down to zero and still have a credit crunch. See, people don't get that. When you go into a recession, you go into a depression, yes, assets start deflating, but people run to the bonds and they bring that down. But what happens is the banks get scared and they will not make loans at any interest rate. So a lot of times the mortgage rate stays even higher than it is now, even though the rates have come down. Now, the mortgage rate's higher because you have to go out and get what's known as hard money loans. Because the banks, they're frozen at that point. They're afraid. They are not going to make you a loan. You can have an 800 credit score. You can put 30% down. They're not going to be making loans. Now, what's this going to do to your house price? It's not going to be pretty. But Mike, there's no inventory in my area. Houses can't come down. Look, if nobody can buy a house and one person has to sell, the price can drop 50% like that. You don't need a bunch of sellers. You just need that demand to disappear. And when the banks stop loaning money, that demand goes away. It dissipates. It's not there. It goes away. Right now, we got this kind of a facade, kind of a mirage, if you will. Right now, they're trying to tell you this is a hot market, right? I mean, look at all the sales that are happening. All the sales, sales are down about 30 to 40% in most areas, but it's still a hot market, Mike. In my area, that house came on and it sold like that. All right. So There's no inventory, which is making this facade. The one buyer came and bought that house. I get that. I get that. These are definitely the good times. Look, you guys haven't seen anything yet, but a lot of people are going to be in for the rude awakening when the credit crunch happens. When the credit crunch happens, it's not going to be pretty. And what if you combine that credit crunch with the recession or depression? And what happens if we have to reset the dollar, reset the debt, the 32 trillion? We got 32 trillion on the balance sheet, which is going to reset at some point. I don't know how that's all going to play out, but it's not fair to the young people that the boomers ran up this $32 trillion in debt. We live way above our means. Our whole life we've lived above our means. Look at it. If we want something, the government will print it for us, right? Right. Okay, so there's all this stuff coming together. People don't get that. People don't see all the forces coming together. The banking crisis, the credit crunch, the recession, the depression, the reset of the currency. Our currency is going away, going to zero. Look at, they're going to introduce that central bank digital currency. It's all coming together at the same time. It's not going to end pretty. Now, you can get out there. Look at, you can get out there and buy a house. That's the other alternative. People are obsessed with it. They tell me that they're so depressed that these houses are going up. Well, you want to get more depressed? Go out and buy one. I think you're going to be more depressed than 1 year from now than you are now not buying one and watching your neighbors. Oh, look at that equity envy. I could have equity envy if I had bought into this market. Yeah, I suppose you could. Would you have made it out, or would you held on before it all comes down? Anyways, I got a little bit carried away. Markets are open tomorrow, so give me a thumbs up. Why not? I'm Tall Mike. Get out there. Enjoy the weekend, everybody. We'll talk again real soon. Bye-bye now.